Sometimes we real estate investors find ourselves in a place where we've bought some properties, we are making some progress, but we get frustrated, get burned out. We're kind of spinning our wheels where we're doing all this effort, but maybe we feel like we're not getting a lot of return yet. Well, if you found yourself in that position, I'm going to tackle that question and that problem in today's episode of Ask Coach. And we're starting right now. Hi, I'm Chad Carson. You can also call me Coach Carson, and this channel is all about investing in real estate so that you can retire early or achieve financial independence and do more of what matters in your life. In just a moment, I'm going to take you to a clip from a recent live stream that I did. And in this live stream, I got a question from someone who is an existing investor, and he or she, I don't know which one it was, already had 8 properties. So they kind of were a little further along. They weren't brand new. But the dilemma or the challenge that this person had was they asked, is there ever a point you get to where you're not just working hard for just a little bit of return? They felt like they were spinning their wheels or they're kind of burning out because they're putting all this effort in and maybe they've been doing it for years and yet they're not feeling like they're getting a real financial return, or maybe they're not seeing the things that they really got into it in the first place, the lifestyle benefits, the progress they wanted to make. They're not seeing it. They got all work and no fun, it sounds like. And so it sounded a little bit burned out. And so I want to give you a response. I've been in the middle of this myself, thought about it a lot. And so I'm going to give you my thoughts on that right now. So I love this question because it sort of gets to that big picture strategy. It's actually when I wrote the book, The Retire Early with Real Estate, I was writing it for this kind of situation because I feel like there's lots of information out there, and I love sharing like practical, how do you buy the property? How do you analyze it? How do you run the numbers? How do you manage it? But there's also like stepping back and looking at how are these 8 units that I own, like moving me forward in my life so that I can do more of what matters. Like I noticed that wasn't as much talked about. And so I'm very interested in that. And I think a lot of you are too, because that's why you got in real estate in the first place. It was not just to own properties. As fun as that is, like who wants to just own properties and that's all you got? Like you want these properties to help you have fun in life and help fund other things that you're doing. And so that's what I'm reading behind this question. And if this person was sitting right next to me, like these are the kind of questions I would fire back at them. I would say, number one, like, are the properties you bought actually good deals? So you've got these properties, you've got 8 units. It feels like you're not getting a good return. Is it possible that you just bought properties that weren't good deals in the first place? That wouldn't be the first time that's happened. I have done that myself. I have a couple properties that I still own where I feel like I'm spinning my wheels, I'm doing work and I'm not getting any returns. And so if that's the case, it might be time to think about like how to move forward. And this is actually, we were talking about where we are in the market right now. If you, what I would do is evaluate all 8 of those properties, be very honest about the numbers, like put them in a spreadsheet and almost look at those properties as if you're buying them again for the first time. Look at those as a new buyer. And I would go 1, 2, 3, 4, 7, 8. Would I buy number 1 again? Like given what I could sell it for today, like I could sell it for this price, would I buy that property again? Does it have good potential in the future? Are things looking up? If I said no, I would ask myself why. Like why would I not want to buy that property again? In some cases in my own situations, I've said, no, this property is too far outside my management infrastructure. Like I just sold a property in Westminster, South Carolina, and it's, 10, 15 miles. Well, that's not 15 miles, is it? It's a 20-minute drive from my house, which is a little bit too far for me. It was also a property that had cedar siding. It was just not ideal for a rental property because it always had bees drilling holes on the outside of it. It was in a forested area. Just a little bit too much maintenance. It had a septic tank that had to be, just managed over the long run and pumped every once in a while. It just wasn't the perfect rental. And I looked at what I could sell it for. I could sell it for about 120 to 130. And if I could get that capital back out and I had a very low basis in that property, could I go buy something else and do better? And in my case, the answer was yes. I could sell that property and do better. And so like in your case with these 8 units, I would go rank those. I would rank them on financing. I would rank them on like which ones are best financially. How do they do in terms of like this hassle? Are they too much hassle? Like my, cedar siding house is a lot of hassle, always having to mess with those bees and different things. Are the tenants good in each of these properties? And so then I would rank them and say, all right, here's my number one property that I never want to sell. It's doing really well, all the way down to like, here's number 7, 8, 9. I just are not that good. And so you might start selling off some of your properties because this is a really good selling market. This is a good time to be a seller, and do a couple things. It might be that you just have to sell it for what you have in it and you don't make any money, but maybe you just get your down payment back and you free up your time from that property and you can start over again. It might be that you have a big gain because it's gone up in value a lot. In that case, you might want to do what's called a 1031 tax-free exchange. That's actually what I did on that property that I sold earlier this year. And so you're basically trading that old property for a new property by going through this special process, and you have to hire somebody to help you do it. But if you can do it all that correctly, then you don't pay taxes on the gain that you have. And so you can basically take 100% of the money you had, equity you had in that property, and then transfer it to a new property and use 100% of that money to buy the new property. And that's a really powerful tool that's basically compounding your money. Like just by using that money, taking it from a low efficient, financially efficient deal, putting it in a more efficient deal, you could probably increase your cash flow if you do that strategically. So I think that's one thing I would think about. The person who asked this question is, are these good deals? Is there some way I could kind of recycle my portfolio a little bit to make it better? That's something I've done over the years and had good success with. The second question I would ask is, maybe the properties are okay, but maybe it's your financing. So what if you got a loan at 7% for some reason, and because you're not getting a lot of cash flow now because the property is such a high interest rate. So maybe you could refinance that. Rates are still pretty good out there. So I would look at refinancing. If it's a keeper property, but the financing is just not good, it's a high interest rate, maybe you do that. Maybe you have a property that you've been paying down like on a 15-year loan, and that's the reason you're not seeing much cash flow. And in that case, maybe you should shift to like a debt snowball. Like maybe you could take a bunch of extra savings and try to pay off one or two of those properties. And when you pay a property off, if you've been paying $1,000 a month on your mortgage payment, and all of a sudden you knock out that mortgage, you've just freed up $1,000. And all of a sudden, what seemed like you were getting no cash flow is all of a sudden you're making a lot of cash flow. So that's where I go back to like big picture strategy. Like where are you in the whole cycle? Are you at the very beginning and you're just trying to grow? Are you at the very end and you're trying to, leave your job? Or are you somewhere in between? And I'm just going to assume this person's somewhere in between. I don't know what their situation is, but I think it's really important to get to these financial milestones where maybe he's not at the top of the mountain and reached his full financial independence. But if he could get to the point where he paid off a couple properties, he refinances a couple more, he sells one or two. So he's basically kind of tweaking his portfolio a little bit. And what if he got to a stage where he went from like $500 a month in cash flow to $2,000 a month in cash flow, positive cash flow? Now maybe he needs $5,000 a month to get to where he really wants to be. But by getting to $2,000 a month, at least in my scenario, in my life when I did that, it freed me up to actually do some things, to take a break, to have a little bit of stability and a foundation. That's not everything, but that could take you to the point where maybe you could you could leave your current job and go to another job that makes a little bit less money, and that makes your whole life happier because you do that. Or maybe you could take a mini retirement. Maybe you could negotiate with your work to take a sabbatical for 3 months or 6 months and just do something totally different. Go travel, go take rent an RV and travel to all the national parks out west for a while. Or if you're like me and you want to go to Latin America, go learn Spanish and travel to Costa Rica or to Ecuador or, Colombia or somewhere else. That's what the finances were designed to do. Like that's what that cash flow was designed to help you in your life. And so that's what I would encourage you to do. The person who asked this question is to see if there's ways to tweak your portfolio, look at selling, and then strategically buying, maybe with a 1031 exchange, look at refinancing, and look at using one of my kind of wealth building kind of strategies like debt snowballs to get a couple properties paid off and get to that plateau that you can increase your cash flow and be at a good place and take a break. I think you're burning out a little bit and you need to take a break. Many of us who are in this business of climbing, type A, go after it, be an entrepreneur, sometimes we need to like remind ourselves that we need a break, that we can't climb for 20 years straight. we need to take a break. We need to have enjoy the fruits of our labor a little bit. And that was a hard lesson for me. But leaving the country sometimes did it for me. Like I would just take off and go for 4 months or go for 17 months in the last case. It sort of gives me a perspective, and it forces me out of projects and doing more stuff and doing all that and just relaxing a little bit, enjoy life, reflect on what's going on, and kind of move forward a little bit. Thanks for watching this episode of Ask Coach TV. I hope it was helpful for you. I would love to hear from you. Have you found yourself in a situation where you need to maybe tweak your portfolio, sell some properties, refinance some properties, where you are just getting frustrated by lack of progress? And so if you have, I'd love to hear from you. What did you do? What kind of challenges have you run into? And if you have any other ideas on related topics like this, please leave them in the comments. I would love to hear what's on your mind. And if you're new to this channel, I hope you'll consider subscribing. You can just click on the button down below and click subscribe on YouTube. If you're watching on Facebook, just click the like button. I have plans for a lot more videos coming. A lot of questions have come in that I can't wait to answer for you, and a lot of other topics. So if you'll stick around, more of that will be sent to you when you subscribe, and be sure to click the little bell on YouTube. That'll send you an email notification that a new video is up. So again, this channel of Coach Carson TV is all about investing in real estate so that you can achieve financial independence and do more of what matters. And so we can do that all together. I want to have company, more people in this movement of financial independence and doing more of what matters in your life. So thank you so much for being here. My name's Chad Carson, and I'll see you in another video.